morning. Good morning, everyone. Good morning, governors. It's a real pleasure to be able to moderate this distinguished panel this morning. Governor Michael, Governor of Central Bank of Belize, Governor Rolle, Central Bank of Bahamas, and Governor Antoine, the Governor of the ECCB. And we are going to be discussing the evolving role of the US dollar amidst rising stable coins. What are the implications for the Caribbean? And I think as we are all pegged to the US dollar, our countries all have a fixed exchange rate with the US dollar, we don't need to remind ourselves about the important role of the US dollars. We know how after the Second World War the US dollar gained this prominent position as the reserve currency of the world because of its economic might, 40% at that time of the global economy, the strong rule of law in the US, the role of the US dollar in the deep financial markets, and also its military power. And all these factors still play a role. But at the same time, as governors, we get these questions, and I guess the same will be for you. What happens if this role of the US dollar is evolving and maybe gradually being threatened? Being threatened because of a changed US position, maybe loosening the strong dollar policy a little bit, maybe using sanctions too much, other things. So my first question would be, and I'd like to turn to you, Governor Rolle, to ask you, what do you see as the main threats that could change this role of the US dollar in our global reserve system?
Good morning, and thank you, Richard. It's a pleasure to be here with all of these central bankers and researchers. Thank you as well for the hospitality that you provided over these few days. I think to put the question into context in terms of what would be the threats to the dollar, let's look at how the US dollar got to its prominence, and then I think you begin to understand. And I would summarize as three issues. One is economics, also the political institutions in the United States, the strong political institution, as well as I would call it almost the willingness of the United States from a political, economic, and every other respect to stand behind its leadership position globally. And so to the extent that institutions and the political credibility of the United States mattered, it meant that the United States dollar served as a safe haven currency. And to that extent, it's likely more weighted in countries' reserves holdings than just the economics. But the economic is very important because it means that we pay and we settle in dollars because we are trading largely with the economy that is the most dominant globally. And I think when you look at it from that perspective, one would expect that the significance of the dollar in the global space would really depend on relatively how the U.S. economic influence, wanes over time, if it does. We see evidence that that could be happening given the emerging economies. The other would be the extent to which U.S. institutions weaken from a credibility and a safe haven perspective. I would not conclude that that is a trend. The third would be whether, from the factors that are within the U.S. political control, that the United States is prepared and willing to support and stand behind the role that it has traditionally had. And we need to understand that some of that is also the way we define the U.S. in terms of a lot of our international multilateral institutions, the IMF, the World Bank, the United Nations, and part of that is also the way the U.S. stood behind the rebuilding of Europe after the First and the Second World Wars. So to the extent that the United States is prepared or relinquishes on those, then I think that would perhaps be the area where you would see perhaps the more pointed shift in terms of the dollar dominance, because then that speaks to where we are attaching a premium to the US dollar outside of economics rationales.
No, very, very interesting. So you answered this question very much from an institutional perspective and a political perspective. I was wondering, Governor Antoine, you want to chip in on this question?
Yeah, so thank you very much. And again, I join with my colleague John in thanking you and your team for your wonderful hospitality here in Curaçao. I think we are going to see, so the US dollar will remain dominant for the foreseeable future. The financial system globally, the US dollar is at the fulcrum of the international financial system. That is not changing anytime soon. But what we are going to see and have begun to see is some de-risking, some diversification. We are seeing countries large and small begin to look for broadening their holdings. You know, it's the same old long-standing principle. Don't put all the eggs in one basket. We say it in investment, we say it in savings. That is easier said than done. But the reality is that any dependency can be weaponized. Any dependency. So whether that's oil, which has been so for decades, whether that's gas, as we've seen in Europe, the war in Ukraine, whether that's food, or the US dollar in the financial system, any dependency can be weaponized. And there is a concern among countries large and small that they could get caught up essentially in economic warfare, not of their own choosing or making, but they can find themselves in those things. So you referred to sanctions, financial coercion, and so on. So what we've begun to see are allies even of the US, which have made it very clear that there is no decoupling. There's no decoupling with the US dollar, but some de-risking, some diversification. So whether that's India, whether that's Saudi Arabia, whether that's the South Asian countries, the ASEAN countries, we're beginning to see that because countries want to insulate themselves as far as is possible, reduce their vulnerability, increase their resilience by not having to be so dependent on a one particular financial system. And we have to be clear, this is nothing new, but we are in a heightened period of geopolitics and geoeconomics. And when we say geoeconomics, we refer to the use of economic instruments to advance national interests, whether those are political or economic. You see the same with rare earth minerals. So this is a trend that we're going to continue to see. I think for us as a region, we are smack in the middle, and we just have to be wise about how we do it. And I always go back, and I'll end there, with our long-standing foreign policy, where we essentially take the position, as we've done since the 1960s, that we will be friends of all, satellites of none. That is to say, we attempt to be non-aligned, we attempt not to get caught up in great power fights. We try to mind our business and make a living, eke out a living in a world that is very hostile to the interests of small states like ours, but where we have to survive. And our people have legitimate expectations to have an increased and better standard of living. So in sum, the US dollar will remain dominant, but I think you're going to see countries large and small try to diversify a little bit, try to de-risk a little bit just to reduce that vulnerability. And that's going to be a very gradual process.
Thank you very much, and I think that is also reflected in the reserve positions of the central banks. You see over time that that has moved away from the dollar, 70% or more now, less than 60%, and that's a gradual process. And I think the inertia in the system that you also described in a way is going to make it a base case scenario that this is going to be a gradual process. But there is also maybe scenarios thinkable that this might come more sudden than we expect, and that's of course a more difficult question, so that's why I turn to Governor Michael. I always turn to difficult questions to him. Now, do you see a possibility that there also might be a more sudden scenario where the position of the dollar might change more rapidly than we expect, and what would be a trigger for such a scenario?
So the short answer is no, and that's simply because I align my comments with that of my colleagues. Immediate displacement is not likely, and I think Governor, you mentioned the reason why, despite the U.S. dollar being at a 2-decade low, its share as official reserves and also for trade invoicing is still larger than its share of global GDP. That's a staggering figure. And so to break that, Governor Antoine used fulcrum. Is almost impossible to a large extent. And Governor Rolle also mentioned, gave some fundamental context as to why the US dollar became such the global reserve currency. And if you even think back to history after World War I, when the pound yielded to the dollar, you get a better sense of sort of the history of why this came to being. The political institutions or the institutions might of the US, or at least the perceived institution might of the US, contrast that with any other rival currency. The euro is a close second, but there are concerns about integration still there. The UK is not part of it. If the UK chooses to integrate, which is very unlikely for political reasons, you might see that roughly 58% of reserve currency go further down. But imagine how the effort that will take. China has tremendous, again back to the point about why US became such a strong global currency. The size of China obviously rivals the size of the US. But institutionally, there are significant concerns there as well. So the euro can't make it because UK is out, and we have issues about monetary and fiscal integration. China has also institutional concerns, not anchored by democratic policies, it would appear. And so you still have to look at then the US, despite its institutions being attacked, still dominating all or most monetary and financial transactions throughout the world. Now, will the US continue to weaponize its reserve currency? The amount of sanctions that the US has issued, particularly on Russia, even Venezuela, hasn't really dented its share in global currency activity at all. So we look at the rival currencies. You see that how politically and institutionally they're far away from making a dent. We also look at if sanctions, if this me against the world kind of thing from the US will make an impact. Not quite. Gold is out there, but gold is just going up in price, not necessarily in volume. So all these factors still make that sudden turn or sudden shock very unlikely. And so displacement, no, but diversification, absolutely.
Okay, thank you very much. So I think we reached sort of a consensus that there will be a gradual role of the dollar, but it's hard to see a sudden shock changing that dramatically. So I'll do another try to spice it up a little bit. We are discussing the evolving role of the US dollar amidst the rise of stablecoins. So maybe before we start the question on how these stablecoins relates to the US dollar, I can ask you, Governor Antoine, what are stablecoins and what might be the use case for it?
Yeah, so stablecoins are essentially crypto assets designed to maintain stable value. And what we have seen is essentially an evolution in the finance space. Stablecoins, primarily denominated in US dollars, surprise, surprise, no surprise, is in fact finding a beautiful balance, if you will, between the speed of cryptos and the stability of fiats. So most of the stable coins that we see now are in fact tied to fiat currency, principally the US dollar, or a commodity like gold. And stable coins are addressing real issues. So I'm not anti-stable coins. we have concerns about their regulation, but I'm not anti-stablecoins. They address the concerns of the traditional finance system. High fees, relatively slow settlement, lack of access to banking, for example. Those have been real issues that stablecoins are now addressing. But of course, they also are addressing the volatility of cryptocurrencies like Bitcoin, which has been a major concern for many of us as regulators and even as citizens. So stablecoin is in a sense in that sweet spot where it's, as I said, it's really harnessing the speed of cryptos with the stability of fiat. And in that sense, it provides an advance in our financial system, and it is not to be disregarded. It is, in fact, it has to be taken very seriously. And I will simply add that its emergence strengthens the dominance of the US dollar. So in a sense, it has become, if you will, a hedge or a mitigant around further reduction, because cryptos now have to peg to the US dollar. They need to hold reserves in US dollars. And many of those reserves are in what? US foreign income securities, US treasuries. So stablecoins are playing a role. I guess we could get into the regulation in a minute, but
no, yes, maybe we go there now. So I see your point that actually the rise of stablecoins, as long as they are being pegged to the dollar, it's a pull factor, it's a demand factor for US treasuries and other US dollar-denominated assets. And then the US government is actually, the current US administration seems to be in favor of using that role of stablecoins to support also the US dollar and keep the interest rate for US treasuries low. And so it's been talk about the Genius Act, and maybe I can ask you to talk a little bit about the Genius Act and whether you see that is the right path going forward.
Yes, well,
maybe you have to explain first what the Genius Act is.
Yes, well, the Genius Act is genius. It's guiding and establishing national innovation for stablecoins. Guiding and establishing national innovation for stablecoins. So this is an act that was passed in the US in July of this year, the Genius Act, intended to provide a regulatory framework for stablecoins in the US, not the world. But we have to commend the United States, because what the US has done is to protect its own vital national interests with the enactment of this law, and presented, frankly, a model for how potentially stablecoins can be regulated around the world. Now, I'm not suggesting that the Genius Act goes far enough, but it does make significant advances with respect to the regulation of stablecoins. So, for example, it requires and mandates reserve requirements. That's something that's familiar to us in central banks. We have reserve requirements for our banks for deposits. It requires issuer guidance. Only certain persons, firms can issue stablecoins. It requires consumer protection with respect to audits to make sure that they actually have the reserve that they're supposed to have, or they say or claim to have. It provides for deterrence against deceptive marketing. It provides for not having stablecoin holders treated as creditors in the event of bankruptcy. They're treated as depositors. In other words, they're given preference. So they cannot be in a bankruptcy, be treated as creditors and go down in terms of the hierarchy of claims. Those are real advances for protection for stablecoin holders. And as I said, what it does, it not only provides a regulatory parameter, but in fact, it reinforces the need and demand for US dollars. And so it's a smart legislation intended to support, obviously, stablecoins in the US, but also to protect the hegemony of the US dollar as the world's global reserve currency. So stablecoins are here to stay, at least for the foreseeable future. And I think the way I look at it is not to run away from them, but to face reality as it is. Jack Walsh once said this. embrace reality as it is, not as I would like it to be. I always remember that. Whatever we feel about the state of the world, it is what it is. Democracy is a real thing. It's a messy thing, but it is what it is. Therefore, our job as policymakers, as central bankers, is to embrace that reality and figure out our path in that new reality. And I'm saying the reality of stablecoins is a real reality. And in fact, the major use case for stablecoins is in fact cross-border payments and remittances. That is a very compelling use case. And therefore, we have to treat with that as a new reality as central banks.
No, thank you very much. And also thank you very much for the clear explanation of the Genius Act and what is in it. That's very helpful. So staying on the topic of regulation of stablecoins, I'd like to turn to Governor Rolle. So looking at our own jurisdiction, so bringing it a little bit closer to home, how should we respond in terms of regulation? And how would you compare stablecoins to other products, financial products that are there and that we regulate?
Well, I think one of the good things that has happened in recent years is how the regulatory standard setting bodies have approached these instruments. Instead of being, confused by the technology or puzzled by the technology, to focus more on the purpose, the underlying purpose, how the instruments are used. And stablecoins are payments instruments as designed. And so the regulatory framework really speaks to how you approach them from a payments instrument perspective. And if you want to compare a stablecoin to a traditional financial product, I would say the closest equivalence would be either cash or go a step up from cash, a current account or a checking account. And so it's a highly liquid, supposed to be always available for use on demand. And to that extent, when you look at the regulatory framework, one can appreciate, first of all, the reserve requirement. As a matter of fact, it has a higher liquidity requirement than a current account because it's supposed to be not treated as a deposit. So it is recognized as being something different from the deposit, and therefore you have the 100% reserve requirement. There's also the focus on the consumer protection issues and the transparency that comes into play in terms of the reserve requirements, as well as being able to, if you look at the US case, verify the existence of the reserves. I think that's important. And Governor Antoine mentioned, aspect of the Genius Act. What I found quite appealing about it was the parallels that could be drawn between that framework and a lot of the standards that, say, in the Bahamas' case, in our payment system regulations, whether the consumer protection, the disclosure, the confidentiality. But the other important thing to note from the standpoint of like function being regulated similarly is that in this space too, there's also an emphasis on the financial integrity issues or anti-money laundering, KYC, and related issues. And so again, it is not a space where it is intended that you will operate anonymously. Now, conveniently, it does allow for easier, cross-border direct peer-to-peer payments, which is good. And so potentially it alleviates some of the correspondent banking issues. But in my assessment, because it is a payments instrument, and because of the way you're supposed to manage your reserves to be always available, you can't leverage those assets. Therefore, it is only a viable product if you can generate income from the transactions volume. And therefore, there's likely going to be a weeding out process where there are going to be a few coins that are viable. And if you extrapolate sufficiently into the future, it means that I think you're still going to get to a world of gatekeepers. And we may well see that the stable coin issuers are suddenly the new correspondent bankers or the correspondent payment providers. So in a way, the evolution might simulate some of what we have now, because the scale that's going to be necessary for these to be viable products is going to change.
Oh, thank you. And staying on that topic of stablecoin replacing or adding, complementing correspondent banking relations, I would like to ask Governor Michael, do you see this as a viable proposition that stablecoins are to be used for trade finance and are a direct threat to the correspondent banking system? And would that be a solution for the Caribbean, of course, because we have issues with de-risking and our correspondent bank relations?
Governor, I think you set me up here. I'm getting all the crystal ball questions, which is highly unfair. Nonetheless, I mean, just to echo the comments of my colleagues, yes, stablecoins will perforate barriers for the reasons cited already. If you look at the last 18 months, the number of issued stablecoins has doubled, really. I think we moved from 120 billion US dollars to almost 250 billion already. Now, that's still maybe less than 1% of all trading activity on a daily basis from our somewhat conventional means of executing payments. Conventional in terms of FedWire, in terms of correspondent banking, in terms of SWIFT. These are what we call conventional. And that sort of activity that goes through that in terms of value is around 3 trillion to almost 7 trillion on a daily basis. So you could see stable coins being somewhat far away from that. But the last 18 months of growth suggests that in a decade, if some of the infrastructure and regulatory issues are sorted out, this has a real chance. But use cases are important. The way in which remittances are used, the way in which B2B trade arrangements are made and adopted will certainly accelerate how stable coins are picked up. But again, this is some distance away and very, very unlikely that we will see mass change in the next 5 years, short to medium term.
Yeah, Governor Antoine.
I want to agree with you, Governor Michael, there. What the BIS paper recently showed is that the use of stable coins have tripled since 2020. In fact, fivefold, actually, tenfold since 2020, tenfold. And they're projecting that could triple. So you said 250 billion, Kareem made the point, that could triple to 750 billion in short order. So while it is still relatively small, and you're right, the direction of travel is evident. And you're going to see a proliferation both in the number of stable coins issued, but also in the value, the size of the holdings. So therefore, we have to address this reality. It's happening, it's coming, it's growing, and therefore we have to have a response.
No, thank you very much. And as long as you deal so well with these crystal ball questions, I'll keep coming back to you. So maybe you should change your strategy here. No,
sorry. One of the things which I don't think I'm concerned about, and maybe the others can join me. And I think Tim may have mentioned bankruptcy. Circle and Tether are these dominant stable coins that are non-algorithmic but backed by actual assets. Should they fail, who owns the asset? Who owns the underlying treasury? It's Circle and Tether, right? That has to be worked out. Even though you have a claim on this coin, you don't own that. It's the actual issuer who owns the underlying asset. So how to establish a legal framework around that is again, another big hurdle, I think, that has to be sorted out.
Well, I think that's part of the reason why the Genius Act is important for the U.S. because it lines up with the principle that if you're providing these products in the U.S. is making certain that its consumers are protected, and it now lays out the rules around, how the consumer protection works out, even from the redemption point of view of persons who may be holding coins.
No, and I would think that on this, that would be a big advantage for Circle being regulated in the U.S. against that Tether being, I think, having jurisdiction in, is it El Salvador, or it's not being regulated under the Genius Act, and I would expect if this continues, then that could make a difference going forward. But taking it to it, because otherwise you all take me away from my role as moderator, because you have lots of interesting questions yourself now. So I want to have one more issue resolved for the audience on the topic, and that is that stablecoins and central bank digital currency. So in the Caribbean, you have been front runners in the space of central bank digital currencies. How do you compare the two? So what is the role of stablecoins? What is the role of a central bank digital currency?
Well, I think the fundamental difference is just that, one is private issued money and the other is central bank issued monies. And to the extent that both have the characteristic that they are supposed to guarantee convertibility for payments, between themselves and other payment instruments. So in our case, and I'm stepping back from central bank digital currency itself, but to the extent that we all have domestic currencies, whether they're in the CBDC form or not, part of the viability of those currencies is that when it's necessary, people can convert into foreign exchange to satisfy cross-border payments. And so from that point of view, the similarities between central bank digital currencies and stable coins is that they both have the underlying assets or reserves that guarantee or assure their value. And interestingly, again, going back to the design, our fixed exchange rate systems are stable coins. So the digital component is new, and the speed at which the assets move are new. And I think that's important. The adequacy of the reserves. Now, stable coins do put a little bit of pressure on us because the claim is that there's going to be more transparency around the reserves adequacy. But central banks and monetary authorities and fiscal authorities also appreciate that part of the response to what's going on in the market is to get better in the transparency space. So it does put more emphasis on the transparency and the governance that needs to come across in the fiat space, and I believe that it is going to see those sort of or enforce those types of results. So that's very important in terms of when you look at what's happening in the stablecoin space versus the CBDC space.
Yeah. No, thank you very much. And I think our fixed exchange rates, our stable coin is competing for the headline of our press release for this conference.
Yeah. But the final thing that I wanted to say on that is that not whether they will coexist, I think they will. That our focus has to be on how we address the interoperability between these instruments and our domestic economies, because if they're being used in payments, then we have to ensure that the convertibility trail is there so that we can still, in an international trading context, realize the benefits that we need to see from the inflows.
No, thank you. No, I think so. We asked the researchers of the region also a question on the evolving role of the dollar and what risk measures should be taken to make sure that we have mitigation in place for the gradual declining role of the US dollar. And we received some interesting answers from you, varying from reassessing the reserve composition, including SDR allocations and gold, enhancing liquidity management, increased monitoring, tightening monetary policy. So can I ask you, what would be your answer? What should be our first line of defense against the declining role of the US dollar, or should we have any? Maybe I ask Governor Michael first, or Governor Antoine. No, maybe Governor Antoine. Can you go first?
Sure. Well, I was going to... Well, you're the moderator. You said go first. I was going to yield to Kareem. No, I think we just have to reassess. Sorry, I just think we have to continue to monitor very closely. I don't see any fundamental reassessment of our fixed exchange regimes at this point in time. I think for us it is basically a vigilance, ongoing monitoring, which is what we are doing. So for example, at ECCB, in our Reserve Management Committee, which is the committee that oversees our reserves management in the bank and for the currency union, we are monitoring a US dollar share of foreign reserves, a US dollar share of trade, US dollar share of remittances, and so we'll continue to monitor those very closely. What are we seeing with foreign reserves? What are we seeing with trade? What are we seeing with payments? What are we seeing with remittances? As I said, we're not expecting anything dramatic overnight, but we'll continue to be vigilant. You said it earlier, it's moved over the last, decade or 2 decades from 70% to 58%. But the reality is that 9 of every 10 transactions, financial transactions, payments, are denominated in US dollars. So, again, I don't see a fundamental reassessment. I don't see the need for us to do anything dramatically different. I think we have to be vigilant. The question of gold keeps coming up, and I know there's some countries, larger countries, that have invested in gold. And there's some small countries, I think my colleague in Guyana can speak to that. I think Guyana has some holdings. We do not. So while the investment policy for our central bank allows us to invest in gold, we've not. And, we keep assessing it. The issue for us is the valuation effects and the fact that it's not income generating. And that is a real issue. We have to generate income to take care of our, our needs, and therefore it is not an attractive option in that sense. I recognize for some it's a hedge against inflation, but for us small central banks, the fixed exchange rate regime, we do have to generate income as well. So for us, vigilance, that's essentially what it is.
So, sorry, go ahead, Governor.
So I think we're talking about contingencies today, right? And I think we have to maybe then try to imagine the world where the US currency fades. It's pretty difficult. I think you're going back to a situation where at the time of the gold standard collapse, you had currencies going at each other, the US, the pound, and a few others. And it created this very fragmented trade environment. Carry trade thrived. Prices and were through the roof. And small open economies like ours really suffered. So if you see, or if you expect that the world will be more fragmented, then you can expect then that it will be a messier place, similar to when the gold standard when the gold standard collapsed. And so you have to maybe do the things that you have been traditionally trying to do. You got to do it better, right? So your fiscal discipline, accumulating reserves as best as you can, try to build regional integration and cooperation, explore swap lines and other precautionary measures. These are things which I really think that we need to start focusing on, just to prepare for a world that can look a lot different, given increased fragmentation and multipolarity, if you will. And that's a very, very messy environment to operate in.
Thank you. Governor Rolle.
Yeah, and just, first of all, unless you are looking at your foreign reserves from a sovereign wealth aspect and therefore focused on returns, your flexibility becomes very limited. And so from that point of view, I think if we are thinking about managing risk to U.S. exposure, then it's an economic exposure. It's a trade composition exposure, and it takes us back to the endless age-old discussion about how we diversify our trading relationships in the region. And so only to the extent that we can make progress in terms of the diversification of the trading relationship, that do you have the opportunity then to shift the composition of your exposure in dollars to the U.S. And we have to also be mindful that other than on the importing side, and we know logistically what that looks like from a transportation redesign point of view in terms of how the Caribbean could make inroads there, but it's difficult. We've aspired to do it, but we have not made any progress. But the other side of it too is that we have to manage the foreign currency risk in the composition of our receipts. And again, to the extent that our economy is largely dominated by export receipts from the U.S. in tourism, it means then that we have to think about how we diversify those. And so only to the extent that we can make progress in those areas of rebalancing that we can feel comfortable that we are better managing the risk, provided, as Governor Michaels hinted at, the rest of the world too is shifting in terms of how it is denominating the currency that it wishes to receive for payment. So even if we're trading with China or with Europe, if the counterparties in those countries are demanding that we settle in dollars, we still haven't fully diversified to the extent that we may wish to. So some of the factors are within our control in terms of how we diversify out of the dollar. But also I think it's going to come down to how the rest of the world wants to denominate its trade. And I think it takes us back to the institutional component in terms of how the dollar matters in global trade.
Well, thank you very much that for this circle, because this is also the moment I would like to open up the debate for the audience, for the participants of the conference. So is there any, and so it can be on the topic that we are discussing now, the role of the dollar and the rise of stablecoins, but feel free to ask other questions that you would like to ask. This is your opportunity. Is there a mic? I have to walk around. Okay, yeah, so anyone, please raise your hand. Otherwise, I have a question, so you can still think a little bit. I have a question.
Well, this has been enlightening. By the way, Timmy, gold do earn income. Yeah. Yes. It's a good topic, and I could tell you that the American dollar ain't going anywhere. Stable coins are marginal. You have to take into consideration, why do we have all these types of coins, virtual asset, stable coins, etc.? There has to be a fundamental reason. It is not because of it is what we have currently is not an efficient medium of exchange. There have to be other fundamental reasons. That is the reason why you will find these alternatives are marginal, right? And it'll take a long, long time You have to remember the fiat currencies that we are using, more so the US dollars, there is high level of confidence. And we all know that central bank digital currency is not acceptable in some jurisdictions that have been minting them. So you have to be very careful. There is an important point when you look at why the Americans ensures that there is some level of regulation and definition. And that has to do with their treasury effect. Remember, these assets that you're talking about have no implication, minuscule if there is any, on monetary policy. But there is fundamental effect on fiscal policy, and in particular, government finances. And that is why you'll find that there is some level of proliferation in developing countries, even some advanced countries, that don't have the wherewithal to put proper regulatory system in place. So we have to be very careful what we are encouraging and what are the implications, the wider implication for countries. Not just, hey, there is an alternative with respect to the US dollar. There are other implications that we have to take into consideration. I don't want to give a lecture, it's enough.
No, that's very much appreciated. Thank you for that contribution. I'm still open for questions. If not, I have one question. Yeah, please.
Good morning. Governor Michael, I think he mentioned swap lines as a possible way to handle some of the uncertainty that is arising with the slow erosion in the US dollar and the possible breakup there. But are you envisioning this as swap lines within the CARICOM countries, or are you envisioning something else?
I hate to say this because I'm pro-regional integration, but I think we're significant years away from getting to that point. But yeah, swap lines on a more extra regional basis I'm referring to.
Thank you. I have a question. Juenci.
Yes, good morning. My name is Juenci Pasel from the Central Bank of Curaçao and St. Maarten. My question is particularly for Governor Antoine. You mentioned something very interesting, that your central bank does not hold gold because it doesn't generate any income. So my question is then, what are the considerations that are being made when you are determining or establishing your foreign reserve compositions? Thank you.
So principally, we start our numeraire is USD, obviously, because we peg to the US dollar. It's our major trading partner. 85% of all our foreign debt is denominated in US dollars. So we have to, I explain to people all the time, we have to have US dollars to pay for imports. 80% of everything we consume, we import. You have to pay for that in hard currency, US dollars. You have to pay for debt in US dollars. If you look at the other, I mean, as I said, 85%, the other euros, the Chinese renminbi, and something else, they're very, very small in the composition. And of course, we minimize exchange risk by keeping most of our reserves in US dollars, because then we're not dealing with the fluctuations and so on. So that is first and foremost why we have to continue to hold significant reserves and why we maintain strong reserves. Obviously, the number one job of our central bank is to maintain the EC dollar. That's job number one. Job number two, keep deposits in the system safe. So we always keep those in mind. Now, in terms of our actual reserves, capital preservation first, liquidity, return. So return is the third in that hierarchy. Preserve capital, make sure you have liquidity. Obviously, as you know, you need to have it for transactions, so you have a couple buckets: core tranche, liquidity tranche, or some people call it working capital, and then return, in that order, because first things first, protect the reserves. So that's how we think about it. But I will tell you, we always get into the discussion reflecting on where the world is at. I say to the team all the time, even if we make the decision to say, no, we're not doing that, let us consider it for posterity and for our own integrity. Right? The unexamined life is not worth living, Socrates. So you have to continue to look at your instruments, continue to look at your stance. That was 10 years ago. Is this relevant and fit for purpose now? And you may make the decision that it is still fit for purpose, but do so in a deliberate, analytical way. Not just as a doctrine, receive wisdom without any analysis, without any reflection. That is what we do in the Reserve Committee. And I encourage our team to do that. So if you have a view, bring it to you. We may not agree, but bring the view to the table. Let's have the conversation, because we want all ideas to contend, and we want to make sure that we're making the best decisions with all of the views and information at our disposal, and that it is reflective. It's reflective thinking, not instinctive, not simply receive wisdom. So that's how we approach it in a nutshell.
No, thank you very much. That's a very clear answer. Any other questions? Otherwise, I have a question on a different topic. So you have all been governor for a number of years, and we are here in a room full of staff of central banks, or mostly staff of central banks. Maybe you can explain a little bit to me and to the audience, what is the quality of the staff that you have come to appreciate most? So personal competency. Can you answer that question?
So I've been at the Central Bank for 23 years. Started off research assistant all the way up. And listening to Governor, forgive me if I don't pronounce your last name properly, Semelier last night. And just what she urged us to do, right? Which is recognizing that this is not a sexy job. You can get paid higher elsewhere, but you're doing this for a public good, and you want to be committed in service for that. That resonated, because really and truly, to be in this institution for 23 years, you had to have that within you, and you want to push that out to your staff. Now, we're a small central bank. We don't have the luxury of our other with more resources than larger central banks. But if you have a specialist, a bank examiner specialist, or even a manager in your supervision department leading on Basel II, Basel III, or RBS project, and then immediately can leave that project and go be a currency ambassador for your new family of currency notes and coins, and to walk around in the public just educating the public, that's committing yourself to service. And you're not getting the sort of monetary reward that you could have gotten elsewhere. You do what you do because you love what you do, and that's a culture we're trying to promote. So Franklin Covey, I don't know if much of you know about Franklin Covey, has a line that says you got to carry your weather. You know, you own that. You own the way in which you approach anything in life. Energy, initiative, that sort of thing. And so we have embarked on this transformational culture shift over the past 3 years that tries to institute that throughout the bank. And of course, not everybody's going to be on board, but you can feel it. You could feel the buy-in. You could feel the commitment in service. And we're carrying our own weather. And that's it.
No, thank you very much. That's really powerful. You want to answer that question as well?
Sure. So for me, it's the, and I've been at the Central Bank for almost 10 years, it's the passion for the mission. It's like Governor Kareem, Governor Michael mentioned. And here I want to give a shout out to two of my colleagues who are here. Yusuf Stafford. Yusuf, where are you? Oh, you there? Yeah. Checking to make sure you're in class. And Naomi Francis. So those are two economists in our research, statistics, and data analytics department. I want to give them a shout out. They're young, They're bright, they bring energy, and we love to have them. So I remind the team all the time, we're public servants. We're regional public servants. It's just as Kareem said. There's a difference between public service and self-service, okay? Public service is public service. And therefore, for us, the motivation and the passion is, what's the passion of our bank? To advance the good of the people of the currency union through monetary and financial stability and promoting growth and development. The way I like to say it is to advance the good of the people of our currency union where they not only strive but thrive. That's our motivation. That's what I get up thinking about every day. That's what 3 o'clock in the morning I'm thinking about. Behind the numbers, you must see people. You must see people. In our case, the 650,000 people we serve. So the passion for the mission is because what passion does, it drives purpose, and in purpose, high performance. Nothing gets done in any enterprise without energy. Last night, President Centrale spoke about conviction. Conviction, repeatedly. I have to talk to you about that because you have to make sure I understand what conviction really means. Because you spoke about it last night a lot. You have to have conviction about what you do. Why are we doing this? And this is nothing to say that people should not have ambition as young people to want to advance and you want more pay. Nothing is wrong with that. But that cannot be why you're in a central bank. That cannot be a driver. So passion for the mission, I'll stop there.
Beautiful. Thank you. I think we have come to the end of.
Yes,
You want to
yes,
respond to this one?
Yes.
Yeah. No, I was looking at you, but wasn't sure whether you wanted to.
I would say that you get a real strong sense of togetherness and family in the central bank environment. So that's one of the things that I really admire. And because I've seen so much in terms of exposure, I sometimes tell my colleagues that they may not even be aware from the inside of how incredibly powerful and strong the relationship and the environment is. And part of the way I make that point whenever I get the opportunity to speak is I say, you people, and that also applies in this room, you people are the brightest and most intelligent people in the workforce in your country, which means that the fact, as Governor Antoine is mentioning, that you stay in these roles and you work in these roles, the fact that you do that means that you're doing it in spite of potentially higher income on the outside. But it also means that you enjoy the work, because I tell people, they say, what do you do? I say, you get paid for telling people what you think. So you get paid for your opinions, but it's thought out and researched opinions. That's not necessarily the case in the private sector at our levels. We have to produce widgets. And the third thing is that in our roles, because we work in small institutions, we do not get pigeonholed into very, very specialized roles and jobs. In our positions, we get to see a bigger overview of what's going on in the economy, in the financial sector, and within our institution. And I think all of those help explain why there is that passion and commitment to staying in the central banking environment. Of course, our challenge is to keep you, because the good thing about it is some of you will end up at the IMF and elsewhere, but remember to come back at some point and give us some more of your time.
No, thank you very much, and please thank you for sharing your wisdom at the end, but also sharing your knowledge about the role of the dollar and the position of and the work of the central bank. This has been fascinating, so I would like to ask everyone to give you a big round of applause. So that concludes our panel. I think there is a break now until 10:30, and I just want to give the floor one more time to Governor Michael, because he has a brief announcement to be made to all of you participating in the annual Monetary Studies Conference. Please.
Next year, Belize.
Great. Thank you.